JB here. JB here. Hope everyone's doing outstanding Wednesday, December 10th, 3:40 on this fine afternoon talk. Really quick about the market. Some names I'm looking at go from there. Happy post-Fed day. Fed Chair Powell off the mic about 15 minutes ago. I just posted on FinTwit. It feels like lame duck. Like that's the best way I could describe it. Pretty much spilling out the same jargon or mumbo jumbo, whatever you want to describe it, that he's done over the last. I mean, it's pretty much his entire term. But it seems like the last six or so meetings, it's kind of like the same stuff, right? He always talks about dual mandates and whatever, but I don't know. So, I mean, to me, that's good, right? Because the markets in the past we'd have huge swings. You worry about some knee jerk reactions. So 2 o'clock, you get the statement come out, and the as expected was a quarter rate cut, which was I mean, what 90% probability, but I think it was like 100% foregone conclusion. And then you saw the markets rally a little bit, and then you have the press conference, right? And you see a little pullback, and then you get worried because there's times, I mean, if you've listened to these press conferences and stuff over the years, there's always been situations where someone puts their foot in their mouth, and all of a sudden one little word is wrong, and boom, right? And so thankfully that didn't happen. And then it was just like the same comments. And it's funny, he came out, he said like, tariffs are going to be a one-off thing for goods inflation. That's the only inflation they see. Then they're talking about the concern around the jobs, right? And I think he was saying it was like a negative 20,000 jobs. Or, either way, to me, it's like it's out of the way. So I guess for me, good to get that out of the way. Now we move on to Oracle earnings after the close. We'll see if that opens more doors to this conversation around the AI bubble, or we can put that to rest too and start to look forward to 2026. That'd be great, right? That'd be the ideal scenario. Bullish commentary from Oracle today, which it's going to be just a matter about how bullish it is. Will it meet expectations or exceed expectations? And will there be any comments or things in our earnings that raises the possibility of the red flags, right? To me, it's the big term, the RPOs, the remaining performance obligation, right? All that, the crazy $500 billion in revenues, the Stargate deal, all those different things that just uh, could open the door for concerns, right? And I mean, the big thing with Oracle is the debt, right? That's when you have all this debt that you're raising, and you don't have the revenues and money to pay for it. It's good, right? You want to be forward looking. Like if you're a company like Oracle and some of these other, well, pretty much all of them, you want to try and make sure you're ahead of the curve. You don't want to be playing catch up down the line. So I don't know. All right, rants for other days. So overall market, great stuff here. 686 through that, and now we're sitting here at 688. Don't throw away from all-time highs. I mean, if Oracle and Broadcom, I mean, even if Oracle does it today after the close, we might be at all-time highs before Broadcom reports tomorrow. I prefer a little steadier moves to the upside as opposed to huge gaps. So hopefully we don't get a huge gap tomorrow, similar to what happened when we had NVIDIA earnings, and that turned out to be a reversal and selling opportunity. So if it does happen, presents itself, certainly got to be ready for it. Hopefully that's not the case. All right, that's overall markets. Good stuff too. Yields were actually going higher a little bit after the Fed statement came back down right when he started doing his press conference. That was the high in yields, and now yields have started to go the other way. So hopefully those stay in the red. And I think someone posted one of those questions: why are rates going up despite us, despite the Fed cutting rates? And he didn't really answer that to at least my satisfaction, but. All right, he always says like he's not in charge of different money. He's only in charge of monetary policy in regards to inflation, his dual mandates, right? Dual mandates. All right, overall market. Now, just quick on individual names. I wasn't going to get too aggressive into the Fed. It was only like a 0.75% trading range implied by the Nasdaq option, the straddle. So not a huge move applied, but at the same token, you just don't know. It doesn't make sense to get aggressive if you have some type of binary event. So I'm kind of keeping things a little bit small heading into the meeting. But of course, ironically enough, the name I'm looking at was SolarEdge. I was posting all day, not all day, all morning. SolarEdge has got a couple different possible catalysts to me, like the whole energy thing and theme with AI. Not only that, the fact that it's a story that was kind of written off. They had concerns going into this year in regards to possibly even bankruptcy, right? So that story is kind of I wouldn't say it's mitigated, but it's to the point where now it's a turnaround story, and the turnaround has already started. So I played those calls. Was it back in September, October for 500, 1,000%? I forget the exact strikes I got after their earnings, right? The day after the earnings. And then it's kind of come back down, right? So it was trading in the all the way up to 45, I think it came down. Then it traded down to 30 this week, 29, 28, and then it's starting to slowly bounce. And I start looking at the chart. I'm like, this looks like it's ready to take off. So I was watching all morning. I wanted to wait to the Fed. And then sure enough, it starts hitting 2 o'clock. I'm looking for strikes. I pull the trigger on some 37.50 calls, and it's like someone unleashed a horde. It's like the market makers are staring at my trades. This happened back in 2021. It's happened a lot of times, but where you see crazy volume on strikes, I'm in, and that's a problem. Well, not a problem. It's not a problem if the stock continues to rally, and that's been the case recently, which is good stuff. The bad stuff is, number one, when I post a trade, some folks just hit the trigger and get in, right? So you might be paying a higher price than I got. That's number one. And number two, even if the stock goes higher, sometimes the premiums are inflated, so the premiums might come out even if the stock hits higher. So it's a lot more difficult to get the maximum potential profit potential. But we'll see how it plays out with Solar Edge. But post this chart early, and this is where I got the strikes. And I mean, take a look at the market makers. So obviously, when you're a market maker, you're on the hook for stuff. So you need to figure out ways to protect yourself if there's a huge amount of options coming in. So sometimes you see some volatility in the underlying stock when you see huge volume come in. I don't think that was all of it, but anyway, crazy stuff. So I got those 37.50s within 20 minutes. They were close to a double. I've been playing in this. I've been doing my strikes, right? I try and take some out to cover costs when I get a chance at 100% or close to 100%. I'll be patient here. They're up like 70, 80% right now. But you take a look at the chart. I think it heads possibly back to 40 before option expiration December 19th. At the same token, you never know, nothing certain. So like I said, I'll lock some in on the way up and cover costs and ride the rest. Not only that, I'm going to look for some more strikes. And I do have some other strikes from when I had on the last move. So possibly look for some more strikes in 2026. All right, so that's Solar Edge. And then I posted this. Oh, I don't have the chart with Kodak, but Kodak did the same thing. When I got those December $10 calls on, I think it was Friday, the underlying stock just went bonkers. And now, not patting myself on the back, but again, it's like someone's following. So anyway, just on a side note, so I created a spec trade channel because, maybe I should come with more comments, but sometimes it's best to either wait if you can't get a fill at the strike price I got and try and do your own due diligence to say, hey, maybe the risk reward doesn't look the same at a higher price. Or sometimes I'll try and post after I get in that, hey, this strike looks decent as well. Because a lot of times market makers do these shenanigan games. They'll I've had instances, especially when I'm trying to sell, they'll pull an offer. You don't get filled. You'll see another position come in and get filled, and then they'll put that offer back in, and then just crazy stuff. All right, so that's Solar Edge. Kodak's floating around here. So this morning, I have the December strikes and the January calls. I add those Januaries. I didn't want to be in a spot if this just fizzles for the next couple of days where the the premiums really start to come out. So I locked the last of my December strikes in. I had already locked most of them in already for 100%, close to 200%. I took the last off for like 70%. And I'll just continue to hold those Januaries because I think, like I was saying the last 2 days, that if it breaks that 10 handle, then I think it's going to be 11, 12, 13 going to happen very quickly. So that's Kodak. That's Solar Edge. A flower, 1-800-Flowers, almost up to $5 here earlier. 508's the big handle. I don't know why I don't have my charts here. Oh, this is the Kodak chart, right? So that just shows you where I entered the strike and then where the stock went after I entered the strike. Okay, so still holding those January strikes. I'll just continue to hold those. I'm not going to get anything more unless there's some crazy move. 508's 200-day moving average. It breaks over that. Maybe I'll look for some later dated strikes. Deckers all the way up to highs earlier in the afternoon, 101.65. Calls still up quite a bit. I just have a few of those left. I'll continue to hold those. And then disappointing names, right? So Duolingo, I locked most of my strikes in already for nice profits the last batch yesterday, and I still just hold a couple of those 225s. Frustrating to see it down here 5%. No news, no catalyst. But the thing is, it could be at 215 right now or 197. It doesn't matter. It wasn't like I was going to sell the last batch unless I can get, if it continues to squeeze. So don't be surprised if I add some strikes into next week if it holds its ground. Maybe I'll wait for tomorrow. I think that's it, folks. Oh, Reddit all the way up here at 240. Tight range, right? Funny. I think it's Friday, Monday, Tuesday, and then throw in today where it's come up to like 238, 239. Can't break free. Find some weakness. Take some time. Gets back up to that level. I think that 240 breaks us off to the races. I think that's it, folks. Trying to think of some other. Oh, yeah, that's it, folks. All right, let's have a great day. I'll be back to rock and roll.